Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar kept to a British tone throughout Wednesday and into Thursday. After a brief tumble towards the lows around 67.30, the market has found renewed momentum after the job numbers for Australia was surprisingly impressive. In the economic data, Australia's unemployment rate dropped to a 48-year low in June after the Australian Bureau of Statistics reported that unemployment dropped from 3.9 to 3.5 after seeing an added job rise of 88,400 in June, beating the forecast of 30,000 with a prior month of 60,600 coming in. So it was a very good number that has given momentum for the Australian dollar, and also back in my view that we should see further gains up towards 68.15 to 68.45 and then on towards 69 cents. I like the way this market's shaping up, and especially with the RSI and the MACD. And as long as we continue to see demand from the bottom side of the range around 65 to 67 cents, and I feel the top side destination will eventually be achieved. The euro finding pretty much a base now seen around 99.50 to 99.95. With bullish divergence, I do anticipate further momentum coming back into the market, and therefore looking up towards the target of around 101.30.40 or maybe up to 102.20 as the dollar index, which measures the greenback strength against a basket of 6 major currencies, briefly refreshed its 20-year highs around 108.38 before dropping back to 108. The whipsaw price action all began after the US Consumer Price Index, or the CPI, reached 9.1% in June from a yearly outlook, and that is the highest rate in nearly 41 years, while the annual came in at 1.3% from prior 1%. In light of the pattern there, pretty much now that likely to see the US Federal Reserve deliver another 75 basis point rate hike upon their coming meeting, which is on the 26th, 27th of July, and maybe even seeing a follow-on in September of 50 basis point rate hike. On the other hand, the European Central Bank has not yet changed interest rates. However, the ECB is expected to make a rate hike on the 21st of July of 25 basis points. In light of the pattern, as I mentioned, I do like the way it's shaped up, so I do expect further improvement. With the resistance now cleared from the highs of 137, stops are likely to go off, and I do anticipate further towards that topside challenge around 139.15.35. Technically, there is still room to get there, although I hold a neutral view. This is just more of a sort of a broader outlook, just in terms of those who are trading, and just like to give a little bit of a guidance, and that is where I believe the market may reach. I feel trading in these highs is a little bit difficult due to the whipsaw price action and the volatility and the thin trading as we get closer towards that top side of the range, as I feel the market doesn't really want to participate at these highs and therefore see a little bit more volatile price action in the coming session. With a base slowly forming around 118, and looks like sterling has got further potential to the upside. However, we still need to clear that 119.65 level to produce any momentum for the market to rally on towards the region of around 122.5. In the meantime, though, let's see if we can clear that top side of 119.65. And as I mentioned, the base in the short term is likely to hold around 118.15.30. Sterling CAD, well, that was a whippy price action overnight after the Bank of Canada on Wednesday raised its interest rates by 100 basis points from 1.5 to 2.5, its biggest increase in more than 2 decades. And it now puts the benchmark rate, as I mentioned, at its highest level since 2008. Looking at the technical pattern, I feel if sterling does kick in, and I feel it will, then we may see a rebound off these lows around 153.75 and look up towards 155.50. Having taken a stab to the downside, gold is finding a little bit of support in front of that level around 1,686 to 91. And view that this market may be respecting this bottom side of the range due to the broader pattern is that we can see here from the weeklies all the way through here. You've got a couple of bullish candlesticks, and also respecting the 1690 level that we could be forming a potential base and therefore look for a recovery. The market has to close above 1742 to support that level up to 1754 to 1764 to 66. Well, since rejection of the key support or the objective that I was looking for at 92.2040, the oil outlook has actually improved and now finding a little bit more momentum into the European session. As we look towards $95 a barrel, we could actually extend up towards 97, which is where I've outlined here, and reassess from there. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day.